Welcome back then to our little journey through the BT Examiner's Secrets from 2024. And the one we're looking at now, because we're going to look at each syllabus area, we're at section C, but in particular we're looking at the financial statements part of section C. And we're looking at what makes financial statements true and fair. Well, I want you to focus on the words true and fair. It doesn't say absolutely correct. It says it's true and it's fair. So how do you know that it's true and fair? Well, we follow things and we make sure it's not error-free. So what that means is, as long as we follow certain ideas and principles, we're not saying everything's error-free, we are saying it's just true and fair. So what sort of things we have to follow to show that things are true and fair and not error-free in total? Generally accepted accounting practices and financial standards, international financial reporting standards. So if we follow GAAP and IFRSs, we will get a true and fair view. And a true and fair view doesn't necessarily mean it's not error-free, because you are allowed small errors, what we call immaterial errors. Okay. 47% of students get this wrong. This is how you become one who gets it right. Let's have a look at the question then from 2024. It says, which two of the following will help you give a true and fair view? The accounts follow IFRS's accounting standards. They follow IFRS's, yes. If you follow generally accepted accounting practices, will that give you a true and fair view? Yes, it will. Does it mean the accounts are free from all errors? Not error-free. No, it doesn't mean that. We are allowed some small immaterial errors. Do accounts contain every last bit of information relevant to the company's performance? No, it doesn't. As I said, you can miss out immaterial things, small things. Okay, so that's that. Now let's go and have a look at a question on the aCOWtancy.com website. Here we are then. It says a company's financial statements comply with their IFRSs, good, but it omits a major lawsuit, not a minor one, a major one, something that's material. So does this give a true and fair view? The answer is no, because a true and fair view is not always error-free, but the errors have to be small. So a big error, like missing a major lawsuit, well, that means it doesn't show a true and fair view anymore. So that's what it says there. Look, no material omission misleads users despite following IFRSs because you've missed something big out. If you'd missed something small, something immaterial out, then that would give a true and fair view. Don't forget, we will be around for the next video where we'll be looking at section D of the BT syllabus.